A new exchange-traded fund, the ETF, has become the first to track stocks in Norway. My next guest, Bruno del Ama, is the co-founder and chief executive of asset manager Global X Funds. Global X has set up the Norway fund that specializes in emerging markets, global commodities, as well as clean technology resources. Bruno, good to have you with us on Bloomberg.
Thank you for having me.
So explain a little bit about this new exchange-traded fund. It's supposed to track the FTSE 30 in Norway, which are the 30 largest companies traded on the Norwegian exchange in Oslo, right?
That's exactly right. It provides diversified access to the largest 30 companies trading in Oslo. And it basically has a compendium of all sorts of companies, but primarily concentrated on, as you would expect, on resources, oil, gas, as well as materials and other resources.
Now, the big holdings in the exchange-traded fund, they're not necessarily governed by what you want to put in or not, but what is part of that index. So it contains companies such as Statoil, the offshore oil and natural gas company, as well as DNB Nor, which is the investment bank, and then Drill, which is also in the energy space. So is this really a play on Norway as a big energy producer?
Very much so, yeah. If we look at what our investors are telling us, they very much want to have access to hard asset economies such as say Canada, New Zealand, Australia, and Norway very much fits into that category. Just over 50% of the fund provides exposure to oil, gas, and resources.
Now, also it exposes investors to the Norwegian krona, right? I mean, people looking to diversify their investments perhaps away from either the U.S. dollar or the euro.
That's very much the case, yes. Norway is not part of the euro, and a lot of investors want to diversify indeed outside of the euro, and in a way not to be exposed to potentially the risk of bailing out Greece and other countries in Southern Europe that have too much debt, too much exposure. So having the diversity and the exposure to the krona we view, and a lot of our investors view as a positive.
What about the liquidity issues of investing in a place like Norway? I mean, it's a small country in terms of the actual number of people, but this is a very wealthy place. I think it's, what, the number 2 ranked in per capita income in the world?
Yeah, the GDP per capita is $57,000, so it is indeed the second largest in the world. Very wealthy country, and so if you look at the liquidity within the market, it's actually fairly liquid. These are large and mid-cap stocks, and the exchange is fairly liquid for these companies.
Now, just to explain how an exchange-traded fund would work, because a lot of these Norwegian companies, they pay dividends on an annual basis, like many companies in Europe. So if you're a holder of the ETF, would you then also get those dividends?
Oh, very much so, yes. What the ETF does, it pays dividend on an annual basis. It would basically take all the dividends that are paid within the fund, reinvestment until the dividend date comes due, and then that dividend will be paid to the shareholders on the ETF.
Now, where are you seeing the most interest expressed, from the institutional investor group or from retail investors?
Well, it's interesting. We actually have a Nordic ETF out there, which is a regional ETF for Sweden, Denmark, Finland, and Norway. Norway's component of it, about 18% of the exposure. We got a tremendous amount of inquiries from institutional investors saying, hey, we want exposure to Norway specifically, of that whole region. So clearly a lot of institutional demand, but there's also a lot of retail investors in the fund.
Now, what's next at Global X? I mean, are you going to be looking to start some new exchange-traded funds?
We have filed also for Denmark and a Finland ETF. There's no set date as to when those are going to be coming to market. We just recently launched a number of hard asset ETFs, a Uranium Etf, a gold exploration ETF. And we will continue to bring products to market that are unique, that are differentiated, and where we see there's demand, and the ETF package is a good package for that product.
Now, with the Uranium ETF, does that include the companies that mine for uranium?
That's exactly right, yes. This is not a physical uranium ETF. It's obviously pretty tough to store physical uranium, and you have interesting conversations with the State Department. These are in the uranium mining stocks.
All right, so uranium mining stocks, and are you seeing that people want that because they're interested in getting exposure exposure to increase in nuclear energy production?
That's very much the case, yes. In fact, that has been one of the most successful ETF launches this year, period. And it's very much a supply and demand situation. The supply of uranium has been pretty flat over the last few years, not a lot of investment in new mines. And the demand is growing very, very quickly, primarily from China. There are about 45 new nuclear reactors being built in China. So very much the supply and demand and increasing price and an increasing profitability for mining companies.
I want to thank you very much. Bruno del Ama coming to us as the Chief Executive of Global X, sharing some insights into what's going on in exchange-traded funds, particularly in Norway.